Maruti Suzuki was one, and since the morning, it has been in focus on the back of any import tariff increase from India. So the exports for Maruti was something that we'll continue to talk about. But revenue at 49,892 crores is what that number has come in. Broadly, beating estimates in this number definitely. The operating leverage, and that's something that we saw actually in TVS as well, where the number for both revenue was very strong as well. EBITDA is something that we'll just get those numbers as well. But on net profit at 3,700 odd crores, it's a miss. Now, it is a miss, and largely I'm looking at if there is any exceptional item, because we saw the labor code impact specifically for TVS as well. So that could be one of the key reasons. But also in terms of higher raw material costs, because this was a quarter where aluminium, copper, both were going to impact the results. So you do see that miss actually coming in on the EBITDA margins at almost 11.2%. It is a miss for Maruti Suzuki on margins because the expectation was of 11.7%. So it's definitely a miss there. While volumes have been quite strong in this particular quarter, it seems to be that the EBITDA margin has come in below the estimates. You have to understand, because this is the first quarter where the SUV share actually is lower compared to the same time last year because of the revival in entry-level segment. So you could have seen multiple key facets which could have impacted the margins, but you see that stock reacting negatively, that big downtake coming in now. From the morning, what I was actually talking about is that South Africa could possibly increase the import tariff from 25% to 50% on all cars they import, and India has a 22% share, with Maruti alone having 30% of their exports coming in from South Africa itself. So there is multiple impacts that we are seeing on this one. But Lancelot, very quickly, because the margin number is something that the street's not liking one bit. Stock's down almost 5% now. Any quick view that I can get from you on this one?
So I think, while margins are also are under pressure because commodity prices continuously rise. I think you've seen it in almost all the commodities that are there, whether it's copper, silver, everywhere the prices have been moving up. So I think taking an increase in the prices of the vehicles that Maruti is selling in the market without impacting demand is going to be a key for it to maintain its margins. Otherwise, margins are definitely going to get impacted. And we're seeing that re-rate because even at the current level, it's still trading at 30 times earnings. So, which is a little expensive for Maruti. So, yes, there could be some more downside, but over a longer term period, if you can accumulate at lower price multiples, I think Maruti is going to continue to outperform over a longer period of time.
Just one quick aspect to point out as well, because in terms of the number for employee benefit expenses, that has risen up quite sharply in this quarter at 2,692 crores. When you compare that on a YY basis, that was 1,779 crores. So it is a material increase. You have to realize that there's also been addition of capacity that has come in. So that new aspect is also impacting and having an impact on in terms of the profitability as well. But overall, we continue to have and monitor this particular number. Margins, yet again, viewers, it is a make or break for auto companies in this particular quarter, because demand side, it did get a lot of boost and stability as well. So we continue to get you more perspective as and when we can, but that one-time impact, which I was talking about, that 594 crores on the labor code impact, that's been one of the key aspects, which is having that drag, exactly that 400 to 500 crore difference. So probably, if the management can have some more, in terms of commentary, will be something to watch, because this was something that we're seeing an impact across players. It was almost 40 crores for TVS, and all the IT companies, FMCG companies also reporting that. But Akshay, on the charts, I know it's a very volatile chart right now, but Maruti has seen a lot of correction. And of course, welcome to the show. From almost that high of 16,000, 16,500, is there anything that you can offer on the charts for Maruti right now?
Yeah, so initially, yes, there is a lot of volatility, the immediate reaction to the results. But what I see on the charts is that there is a 200-day exponential moving average around the levels of 14,500. 200-day exponential moving averages are known to provide trading supports for the market. So in all probabilities, there is a very high chance that the stock will try to attempt some pullback from the current levels, irrespective of the numbers. So roughly at this time, although it's a bit volatile out there, roughly 14,200, 14,300 can be concluded as a support. Downside looks capped, and there is a good chance there might be a trading pullback from the EMA, which I mentioned. And in case that happens, we're looking for a slight bounce back till 15,400.
And definitely, got the view, Akshay, and thank you for that. You have to realize that 12% is something that 11.8, 12% was the margin that you were expecting. So barring that 594 crore impact, and colleague Somit helping us with that number of 12.4% margins, excluding one-time impact. So I think that will be something that could offer respite to a stock that has corrected, but the larger issue will be, in my opinion, on the South Africa impact, because Maruti has prided itself on a target of 4 lakh vehicles to be exported in FY26. Now, if there's any deviation on that impact, will be something to watch. But we also have Mayuresh Joshi of MarketSmith India joining in now. Mayuresh, good afternoon. Thank you so much for joining in on this very short notice for Maruti Suzuki. But specifically, what do you make of the numbers? Because we are seeing a miss in terms of margins coming in at 11.2%. We're also seeing a subsequent miss on profits as well. Your first cut essentially of the numbers.
No, I think below estimates, and that is the whole construct. So I think how the volumes will play out going forward, looking at GST taxation is going to be extremely critical. But margins have been a tad bit below expectations. Going forward, I think what really transpires in terms of the EU deal and what kind of an implied effect does it have on auto numbers and volumes is also to be watched out.
In terms of Mayuresh, because the one-time impact that has hit definitely the profitability, 594 crores of a labor code impact. But beyond that, also it does seem to be a miss, right, in terms of the margins as well. Possibly commodity costs is what your estimate goes by as well.
In all likelihood, yes, and that would likely continue with the exponential rise that we've seen across metal prices, base metals in particular, which will obviously have an impact going into Q4 as well. So I think a part impact of that, and partially, I think, yes, the one-time labor cost has hit the numbers as well.
Also, Mayuresh, one more key point, which was on employee benefit expenses as well, because in this quarter, it's coming at 2,692 crores. On a YY basis, it was almost at 1,779 crores. So we're almost seeing an 8 to 900 crore increase. Now, I know they've had some capacity additions in this particular year, and hence the YY number. But even on a quarterly basis, it's up at 2,692 crore versus 2,000 crores. So anything that you can offer on this? Because while the capacity could explain this, that's a very big jump in employee expenses.
Maybe we'll have to look at that. So not really sure on that. So I think we'll have to wait for the final details to come.
And also on, finally, because we have that news update coming in, Mayuresh, of that import duty going up in South Africa to almost 50%. Any views that you have on that as well? Because it could have some impact on Maruti, which almost gets 30% of its exports from South Africa.
Right. No, I think that will have an impact as well. So let's see how this entire stuff goes through again.
Got it. And, as we speak, a very, very, could say surprising, could say crucial, getting in all the adjectives, because, we've almost seen a 5% downtick on the stock and a revival yet. So maybe Street giving it some respite on the one-time impact, barring which 12.4% margins would be a big beat. But multiple questions there, right? Because in terms of the increase in employee expenses, the increase in other expenses, what I could see as well, 5,400 crores versus 4,600 crores. So a lot of questions for Maruti, at least to answer in the con call, which will come at 4:30. And of course, we'll get you that big update on that. But largely all the time we have on this edition of a curtailed Ask Profit. But do stay tuned. India Market Close comes up next.